All right, what's going on, everybody? Welcome back to another video. I'm your host, Cobra Trading, and to all my subscribers, welcome back. If you're new around here, no worries. Make sure that you smash the like and subscribe button so that you get access to all of my tutorials, analysis, all that good stuff. So today we're going to get into something that I've been super excited about. It is a whole trading system algorithm that I've been putting together over the last couple of months. So let's go ahead, hop right into the charts. Future Cobra here. I forget in this video to mention at any point really that you can, if you're in a long position and you're entering one from below the ATR bands, you can actually have your take profits be the top of the ATR bands and vice versa with a short. So just keep that in mind. That probably doesn't make sense right now, but as soon as we flip over to the charts here, you'll understand exactly what I mean. Let's go ahead and start with my baseline tool, which I'm actually only using for the ATR bands. So when I bring this up, you can see that these bands have formed here. So a lot of people are immediately going to think, oh, well, you know, that's just the Bollinger Bands. They're actually not Bollinger Bands. They're calculated differently. And basically what this is a variable ATR. So when you're in a short position, your top band would be your stop. And when you're in a long position, your bottom band would be your stop. Let's go ahead and turn on our SSL tool. Immediately, you can see that there's another two lines that have popped up on the screen. I have them green and red, and you can see that when the trend starts changing, the bands start changing colors as well. This isn't really anything new. Basically, what the SSL is it's this. So it's actually called the semaphore signal level. It is a channel indicator. I'm going to leave all of the links to these things in the description below so that you can actually go and read up on how these indicators work, how they're calculated and stuff like that. So the next indicator that we have when I double click is we've got these two other ones that popped up. Now, the one on the top is what I'll go over first. That's called the QQE. Again, I'll leave the link in the description below. The QQE is the quantitative qualitative estimation. So that's actually a combination of three different indicators, a regular RSI, a slow RSI, and a fast RSI. And I'll explain how I incorporate this into my entry and exit strategy in just a minute. And then this one on the bottom, most of you might already be familiar with this one. It's called the Wada-Attar explosion. Basically, it is a more advanced volume indicator. It's a little more accurate. And this is also going to be a good indication of entries and exits and confirmations for entries and stuff like that. It is a little confusing and there is a lot that goes into it. But the reason why I developed this is because it really manages your risk very, very well, as long as you stay very strict to what is actually happening here on the screen. So right here, okay, this is where I entered. So why did I enter here? You can see that this gold band, not only is the green band above the red, but the gold band is above both of them. This means that it's a bullish trend, right? So you always want to see this gold band above the other two bands in order to be entering into a trade. So as that happened, we had confirmation here first. So that's one confirmation. This band actually turned back to green. So now we've got two green bands here. Both of those turning green at the same time on this candle close, especially with a large bullish volume bar like that. That's pretty much all you need for an entry. If both of these bands are turning the same color on the same candle with a lot of bullish volume or bearish volume coming in, I just enter it right away. That's signaling that there's probably a very strong bounce that's occurring. There's a lot of volume coming into the market. Volume plays a very, very big role into this strategy. So I entered here, price kept going, kept going, kept going. How come you didn't exit up here? Well, the reason why I didn't exit up here is because there was no way for me to know the trend was either going to be reversing or if it was going to keep going. So you always want to wait for your candle closes for confirmation, right? Especially on a 5-minute chart. These candles aren't open for very long. So this candle closed. And when this candle opened, we started reversing here, right? So no strategy, no trading strategy or anything like that is ever going to be perfect. You're never going to catch a perfect bottom. You're never going to catch a perfect top. But what you want to do is you want to be able to be getting into the trend that's changing as soon as you know and you have confirmation that the trend is changing. That's exactly what this strategy is for. Most people, probably would have seen this and they would have waited to enter until the break of this high here. They would have entered on this candle. They would have gotten stopped out at entry. Or if they let it keep running, they would have hit their stop loss later on here. So I actually ended up getting into this with this strategy right here. The trade kept going and I exited here. Why? The reason why I exited here is because you can see up here that the green band actually crossed above the yellow band. So that was the reason why I exited here. Plus, it had already hit 2 take profit levels as well. Another thing to notice is that I actually exited at a pretty good point here, because on this very next candle close, you can see the red line crossed above all the other lines and the volume down here was very low. You've got the MA sloping down. Why didn't I stay in even though both of these green bands are green? Basically for the reasons that I just explained to you. This is a scalping strategy on the 5-minute chart. You want to be in, you want to be out. You don't want to have a trade open for longer than maybe an hour or two. And that's pretty much it. So it switched here a lot. There was kind of like this little jumble of mess going on in here. This is kind of an area that you want to avoid. These are areas that are just kind of filled with indecision, especially on low time frames like this. I try not to get into positions that have no clear direction yet. Here, I got confirmation that, hey, maybe I should be looking for a short again here. Maybe the trend is going to continue. This was also confirmed on the previous bar with bearish volume above our MA. And on this bar, this was 2 bars now above the MA. I waited for a 3rd bar for confirmation. And this bar up here, this MA is staying red. So I entered here. Now, originally, this is pretty loose especially for a scalp short when the trend on larger time frames is bullish. You don't want to really be trading against the trend, right? That's why it's called a short position. You want to be in and out super quick, low risk as possible. So I actually set my stop to this level. And the reason why is because this was a level of resistance up here. So I'm basically saying to myself, hey, guess what? If price comes through and it ends up going above that resistance level, I don't want to be in the trade anymore. It's going to be a wash and the trend is probably going to continue upwards. It did not. It kept going down in my favor. And the reason why I exited here, if you can see, I actually exited on the open of this candle or the close of this candle. The reason why is because now you've got volume dying off here. And this was barely above the MA line. That means that volume is decreasing. Plus this bar is now gray, which means that you can see the different colors here on this other MA that had crossed. And when it's gray or it's switching between gray and red, that's a good indication that there's not enough volume in the market for that trend to keep going. It's probably going to end up hitting a bottom soon and reversing or going sideways, which is also not very good. The volume was very low on this bar close. It was below the MA. So I exited here. My first take profit had already hit. My second take profit had already hit. Once my first take profit is hit, I always move my stop loss to entry to protect myself. The name of the game is money management. Like I mentioned before, you always want to be taking money from the market. You don't want to be giving it back. So whenever I'm scalping, especially on short time frames like this, as soon as my take profit one is hit, I always move my stop to entry unless I'm not sitting at my computer for some reason. Where my stop loss is on this, you can see that, hey, that's a pretty loose stop loss, especially for, doing leverage trades on scalping, on the 5-minute chart. That is correct. But the reason why this system is so awesome, the reason why I designed it this way with these ATR bands is because as this price moves on, you can keep moving your stop higher and higher and higher and higher as the band goes up until eventually you've probably taken profit once or twice. And now it's a completely risk-free trade. You don't have, you have a stop loss at your entry, but the price can never go back below where you entered now because that's where your stop is. You're not giving money back to the market. I kind of wanted to explain a little further just before the end of the video here, just to kind of recap that, yes, there is a lot going on there on the chart. Yes, there is a lot of things that have to be happening and orchestrated in order to either enter or exit a position. Yes, this still does involve obviously knowing your support and resistance levels. I'll put a little link up here on the top. Go ahead and click that. I have a whole tutorial on support and resistance levels. This obviously isn't the final copy. I've been working on this for a few weeks. Yes, I only started live testing it throughout the day as if I was actually trading it today, and it's already, it's gone 5 for 5. The settings by no means are default on any of these. Obviously, I'm not going to be giving those settings out because 1, everybody trades different, and 2, it would kind of defeat the purpose, right? Like, these settings are for me, they're for my trading style, they're for my risk. I have it set up for the ways that I like to manage my account and my portfolio so that I'm not giving money back to the market. So if you have any questions or something like that, let me know in the comments below what you think about this. Do you think it's too complicated? Again, make sure that you smash that like and subscribe button. And until next time, happy trading.